Statement of income and expenditure. We are going to do an illustration, but let's, for the purposes of understanding, let's do a comparison briefly of a profit making organization and not for profit organization. You've seen here the first statement that we are required to prepare is a statement of income and expenditure. For profit making organization, the equivalent of the statement of income and expenditure is the profit and loss account. Those organizations who exist to make profit, they prepare profit and loss account. All right? But for not-for-profit organization, what we know as a profit or loss account for the profit-making organization is the statement of income and expenditure. Statement of income and expenditure is a crucial financial statement for not-for-profit organizations. It provides a summary of organizations' revenues and expenses over a specific period of time. So, for profit or profit-making organizations, this statement can generate either a profit where the revenues exceed the expenses. But for not-for-profit organizations, where the incomes exceed expenses, we don't call that profit, but we call it surplus. Instead of now profit, we refer to it as surplus. But in the event of any loss, for the profit or profit-making organizations, we refer to it as loss. Where the expenses exceed the revenues, we have loss. But for not-for-profit organizations, where the expenditure exceeds income, we call it deficit. Another distinction between these two organizations is in relation to the balance sheet. Now, the balance sheet or the statement of financial position of a profit-making organization, you have what we call capital. This is the money that the owners inject into a business. We call it capital for profit-making organizations. But for not-for-profit making organizations, what we know as capital here is known as the accumulated fund. Is known as the accumulated fund. Number 5 distinction is the cash book. Profit-making organizations prepare a cash book that shows the cash transactions, that is the cash payments and cash receipts. When the organization pays for expenses, it's recorded in the cash book. When it receives cash, it's recorded in the cash book. So the equivalent of a cash book for the not-for-profit organizations is what we call receipts and payments account. So the idea is the same, but the names are different. So the receipts and payments has a debit side and credit side, just like a cash book that has a debit side and a credit side. So these are different names for the not-for-profit organization. Instead of capital, we refer to it as accumulated fund. Instead of loss, we refer to it as deficit. Instead of profit, we refer to the excess of income over expenditure is referred to as surplus. And the profit and loss account, we refer to it as a statement of income and expenditure. Is that clear? So that then allows us to do a question. August 2024 financial accounting question number 2 reads, the following is the receipt and payment account of Vijana Youth Club for the year ended 30th June 2024. So we have the receipts and payments account, what in profit-making organization would be referred to as a cash book. So you can see we have balance brought down, then we have the receipts on the debit side, subscriptions, bar takings, donations, sale of equipment, sale of magazines, competition tickets. Then on the credit side, we have expenses. Additional information number 1, investment income of 10% per annum is receivable as at 30th June 2024. Number 2, during the year ended 30th June 2024, equipment with a net book value of 0.6 million was disposed of 0.8 million. Number 3, depreciation policy is on reducing balance as at the following rates. Then we have motor vehicles 10%, equipment 20%. Number 4, the following balances were provided for the year ended 30th June. So we have on 30th June for both the years, items are provided there. Required bar statement of profit or loss for the year ended 30th June 2024, 4 marks. B, income and expenditure account for the year ended 30th June 2024, 8 marks. C, statement of financial position as at 30th 2024. Now, candidates, not for profit making organizations, we say they do not exist to make profit, so that is distributed to the owners. But these entities may run businesses in order to raise money to fund the activity of their organizations. Like this Vijana Youth Club, this club is running a bar. The purpose for doing business is to raise money from the bar business so that that money can fund the activities of the youth club. So the money that is generated from the bar then becomes one of the sources of revenues or incomes for the Vijana Youth Club. You understand? You need to get that understanding. That's why in note number A, we are to do the bar statement of profit of or loss account. Bar statement of profit or loss account. That's from 1. The question is August 2024, question 2. Bar statement of profit or loss. So we need to check for bar incomes and bar expenses. Look at the receipts and payment accounts. Do we have any information? Yes, we have bar takings. Do you see that? Bar takings. Bar takings are, it's just like the bar sales. Then on the credit side, do you have anything in relation to the bar? Yes, look at bar wages. We have bar wages. Then you have bar payables. Bar payables, those are purchases, are they not? Purchases, bar purchases. Then do you have any information in relation to the bar. That's how you analyze the question candidates. Look for any information in relation to the bar under additional information. Note number 1 is not related to the bar. Note number 2 is not related to the bar. Note number 3 not related to the bar. Note number 4, do we have information on the bar? Yes. Look at the bar inventory. Then we have bar payables. That's all. Yes. So let's now do this is Vijana Youth Club. Part A, Vijana Youth Club. So we need to do the bar statement of profit or loss. Bar statement of profit or loss for which year? For the year ended 30th June 2024. For the year ended 30th June 2024. So that's it. So we begin with the bar sales or bar takings. What is the bar takings? From the receipts and payment, the bar takings is 40 million. 40 million. This is sales. Then we need to calculate the cost of these sales. Cost of sales. How do we calculate cost of sales? We take the opening stock plus purchases less closing stock. What is the opening stock? Purchases. The opening stock from the note number 4 candidates. Look at note number 4. Note number 4, we have bar inventory opening is 880. 880. Purchases, we need to have a working because there is information in the receipts and the balances in note number 4. But we have the closing inventory of 1440. Closing inventory of 1440. This will deduct. Then what we get here, the cost of sales. Then that will be the gross profit from the bar. So purchases, we need a working for purchases. Bar creditors. We have balances. Balances, bar creditors. To calculate the bar purchases, we need to prepare the bar creditors. We have bar creditors balances in note number 4. Check note number 4. Yes, we have bar payables. Bar payables. Bar payables. So working one. This is bar payables or creditors. So you have balance brought down. The balance brought down there, bar payables, is it 1600? The balance at the end, balance carried down at the end, is it 2 million? Then we check for any payments. We have any payments to creditors in the receipts and payment account. Yes, look at the fourth last item The fourth last item, please. We have bar payables. That means that the receipts and payment, which is equivalent of a bank account, was credited and bar payables debited. Bank. The bank here. How much was paid through the bank? 29,600. So I don't think there is any other information. Balancing. You have any other information? So we have a balancing amount here, and this will be the bar purchases. How much is it? The balancing figure is a bar purchase. This is 31,600. From 600, I can see this is just 30,000. Is it not? 31,600. Am I right? 30 million. Is it 30 million? Yes, 30 million. So this is working on 30 million. So give me the cost of sales. 29,440. Deduct the cost of sales from the bar takings or sales. What is the gross profit? 10,560. Gross profit is 10,560. We deduct expenses, bar expenses, and I see there is the bar wages. Now we need to check if we need an adjustment on the bar wages. And how do you tell? Look at the question. How do you tell that there is an adjustment that is required on any expense or income? Give me the question. Give me the question, please. You can tell if there is need to have an adjustment by looking at the balances in note number 4. You have any balances in relation to wages at the beginning and at the end? Yes, look at note number 4. The last item there is accrued wages. We have accrued wages at the end, that is on June 2024. You can see accrued wages at the end there. Accrued wages at the end. Then do you have any other information? No. We have accrued wages at the end. Do we have any wages that are paid from the receipts and payment? Check the receipts and payment. Receipts and payment. Did Vijana pay any wages? Yes, there is 2.8 in the receipts and payment. So we need a working. This is working number 2. Bar wages account. Bar wages account. There is no balance at the beginning, but we have a balance of accrued wages. Balance of accrued wages 600,000 at the end. So balance accrued at the end on an expense account, we debit at the end. Balance at the end. So there is no balance here at the beginning. There is no balance. There is also no balance at the beginning here. There is no balance. This is accrued balance. Balance in these are wages in arrears. But if the Vijana had paid in advance, at the end we could have it here. But there is no prepaid wages, bar wages at the end. Unpaid expenses at the end, we debit at the end. Prepaid expenses at the end, we credit at the end. So we have 600. Then there is look at the receipts and payment. bar wages. You can see that 2.8 million. That means that the bank was credited and bar wages was to be debited 2.8 million with the receipts and payments of 2.8 million. So any balancing figure on this account is to be debited in the bar profit and loss account. What is the balance? The balancing figure. Give me the balancing figure. This is just 28 plus 600, is it not? It's 30 what? 34? 34 is to be debited here. So the only expense here is 34. Deduct it from that. Then we'll have the bar profit. What's the bar profit? 7160. 7160 is a bar profit. So how many marks are these? 4 marks. 1, 2, 3, 4. 1, 2, 3, 4, 5. So this 7160 candidates will be one of the incomes in the income and expenditure account, which you are now going to prepare here. These are workings. I can do away with this. So we have to prepare the income and expenditure account. Income and expenditure account. Vijana Youth Club. Income and expenditure. This income and expenditure account for which year? For the year ended 30th June 2024. Income and expenditure. So let's begin with the incomes. Then from the incomes, we deduct the expenses. Then we either have a surplus or deficit. So look at the question. Which incomes do we have? Vijana's incomes. Now, to identify the incomes that we need to record here, we check the receipts and payments account. You can see on that account, subscriptions were received of 25.8 million. Do you see that? So subscriptions is the first income. Do we need to adjust this 25,800? How do you tell if an adjustment is required? You look at the additional information. Additional information number 4. Look at additional information number 4. Do you have any balances on subscriptions? Yes. Look at the 4th last item. We have the subscriptions in advance and subscriptions in arrears. Do you see that? So that will require a working. Subscriptions account. Subscriptions. This is an income account. It is a revenue account. And it has arrears at the beginning, arrears at the end. Do you see that? Then you have subscriptions in advance at the beginning and at the end. Do you see that? Then we have subscriptions that were paid of 25,800 in the receipts and payment. So with those transactions, we can do another working. This will be working 3. You can prepare subscriptions account, which is an income account. All right. We begin with the balances. Subscriptions in arrears at the beginning, do we debit or do we credit? Then we have subscriptions in advance at the beginning and at the end. So subscriptions due at the beginning, do we debit or do we credit? Now, candidates, when you are faced with this question, we can be guided by the expenses account. Expenses. This is what you do if you are not very sure. You can use this because what happens here is the opposite of what happens here. This is an income account. It's an income. This is an expense. And candidates, you recall when we prepare the wages account, which is an expense account, we had the unpaid at the end, accrued at the end. What happened? We debited here at the end. Balance carried down. For an expense account, balance on this account at the end, we always debit here so that we add to what was paid. Then the balancing figure we take to the income and expenditure account or profit and loss account. So if expenses account accrued at the end, we debit at the end. That means for subscriptions account, this is due at the end. We do the opposite. We are going to credit. This is balance carried down, due or arrears. That is at the end. So how much is it? Subscriptions in arrears at the end is 1480. Now, candidates, you only need to know this because this is the opposite. Now, once you first do the first entry here, that tells you that for example, this one, the next period, this balance due at the end, the balance due at the end we are going to debit. It will appear on this side if it's an expense. But if it is an income, it will appear on this other side. I hope I'm not confusing you. But let's do it step by step. Okay, let's do it step by step. So if an income account balance at the end in arrears is credited, then that tells you that prepaid will be debited. The opposite, balance carried down. This is prepaid at the end. So what is the prepaid at the end? The prepaid subscriptions in advance at the end is 720. You see that? This is at the end. So once you have this, I'm trying to find a formula to help you, not just to memorize, but you can do it practically. You can see candidates, this balance carried down at the end, the prepaid at the end. At the beginning, you credit balance. In the next accounting period, the prepaid is debited, is credited, I mean. This one is credited, 720. This is the next accounting period. So the next accounting period, this one that is due, balance carried down due at the end. When you get to the next accounting period, it is debited. So with this, now you are guided. You can now insert the substitutions in advance. The substitutions in advance. The substitutions in arrears was 14. Did I write the right thing? Supposed to be 18. In arrears should be 1840. I didn't pick the right ones. This is 1840. Right? Did I do the right thing? 720. Yeah, we are doing the this is the prepaid at the end. Prepaid at the end is 720. Then in arrears at the 1480, that is correct, was correct, 1840. Then at the beginning, we now move at the beginning. At the beginning, balance due at the beginning, using this guidance candidates, balance due at the beginning, we debit. So what is the balance due in this question? The balance due in this question is 1840 at the beginning. 1840. This is balance brought down. Balance brought down. This one is due at the beginning. Then subscriptions in advance at the end. We saw at the end is you see that 720. So we are doing at the beginning. So due at the beginning, we debit. Prepaid at the beginning, balance brought down, prepaid, we credit. How much is it? That is prepaid at the beginning, 2820. 2820. So this is how you go about it. Then, do you have subscriptions that were paid? Yes, look at the receipts and payment. The receipts and payment account is debited with subscriptions. So the receipts and payment account, which is equivalent to a bank, is debited. When this money is received, the receipts account payment is debited, and this one is credited with the receipts and payments of 25,800. So the balancing figure will be what we take to the income and expenditure account, the balancing figure. How much is it? This is subscriptions working 3. How much is the balance? John says the balance is 27. 600. 27,600. 27,600. So we have here 27,600. We look for the next income, and from the receipts and payment, the next income base is bar takings. So the bar takings, we had calculated the bar profit. So bar profit is the second revenue. Bar profit 71.60. That is an income from the bar. Donations, number 3. Do we need any adjustments for donations? Donations, look at note number, that is receipts and payment. We have donations of 96. There is no any additional information on donations, so we just record it as it is. Donations, the amount 9600. Then we have sale of equipment. Sale of equipment. Do you have information on sale of equipment? Can you see any information on sale of equipment? Sale of equipment. Sale of equipment is not an income item, because that is sale of an asset, unless we have gain or loss on the sale. Do you have any information on this sale? Yes, we read in note number 2 that during the year ended 30th June 2024, equipment with the net book value of 600 was disposed of for 800. Was disposed of for 800. We need to calculate the equipment disposal account. We need an equipment disposal account. Equipment, this is working number 4. Equipment disposal account. So the equipment, we read during the year the equipment of net book value. So we have the net book value. The net book value is 600. This is net book value. Is 600. Then was disposed for 800,000. Then when the disposal was made, the receipts account was debited. Can you see the sale of equipment in receipts and payment? That 800 was debited in the disposal. Then this account has to be credited with receipts and payment. Receipts and payment 800. So there is a balance of 200. So is this gain or loss? Can I hear from you? 800. 800. Tell me now, candidates, where do we record the 200 and how do we describe it? What is the description of the 200 on the board? Now let's move on. We'll come back to that. Do you have any other income? Look at the debit side of the receipts and payment. We have donation, sale of equipment, then there is sale of magazines. Sale of magazines, 3.2 million. There is no additional information on sale of magazines. Then we also have competition tickets. There is no additional information on sale of tickets. So we record the two as they appear there. Sale of magazines. Sale of magazines, 3.2 million. Then we have competition tickets. Competition tickets, 7.2 million. Now, as you see, like sale of magazines, we've not made any adjustment. That's why in the exam there are always marks that are just free. Like these ones, we've not made an adjustment, but you earn the marks. We are just copied directly from the question to the answer sheet. Then you get the marks. You understand? Yes. I see someone has said gain. This is true. This is gain on sale of equipment. This is a gain because the net book value is 600. The company paid 800. So there's an increase here, which is a gain. So that's why we are debiting this account, then credit the income and receipt. Gain on disposal, 200. Is there any other income? Number one reads, investment income of 10% per annum is receivable as at 30th June. Investment income, that is an income of what? 10%. Investment income of 10%. Yes, look at the additional information, number 4. Investment at cost on 30th June 2024. Do you see that? The 40 million. So investment income will be the 10% of the 40 million. Working number 5. Investment income is equal to 10% times 40 million, which is equal to 4 million. Is it 4 million? That is investment income. 4 million. Any other income? So give me the total income. What is the total income? Then we identify the expenses. Expenditure. Income and expenditure. $58,960 is the total income. Now help me identify expenses.